Okay, most people probably know about Singapore saving bond, treasury bill, maybe the Temasek bond. Yeah, those can buy. I mean, those are just low risk kind of bonds. Okay, but you look at investment bond, there are a lot more. But I do select a few bond fund that probably you will want to have as well. I try to classify based on a few things. Okay, of course, we look at exposure, and the other is credit rating. Okay, and then underlying bond duration and dividend yield. So you can see that the yield also vary across different bond funds. Okay, and this is more like your return. I try not to look at historical return for bond fund because bond fund is forward-looking kind of fund. So if I look at historical return for this bond fund for the past 10 years, it's unfair because last 10 years interest rate is low. Naturally, your return per year will be low. Okay, yeah, so we should not look at historical return when it comes to bond fund. Okay, what we should look at is about the yield. Of course, that is your return, and also the credit quality. Okay, this is your risk level, right? For example, the first one, triple A rating, technically is risk-free, all right, because this is buying Singapore government and agency bond. Of course, your yield will be very low. Okay, it's almost like Singapore saving bond kind of return, right? Duration I'll touch on a bit later, right? But this is how you can check what should you invest. Okay, you look at the risk level and the return level. Okay, and of course you have Asia bond. Okay, Asia bond. Okay, these two are EDF. You can actually just Google. You can find these two EDF. Okay, one is investment grade average credit rating triple B. The other is high yield bond. Okay, non-investment grade. Okay, of course, non-investment grade technically higher potential risk. That's why you are compensated with a higher yield as well. Right. The other three are bond fund. Short duration bond, United SGD, triple B plus, technically is investment grade, 4% yield. Singapore dollar bond with from East Spring, okay, average crediting A plus and a 4+%. Okay, and Pinko bond fund, which is one of the largest active bond fund in the world. They just crossed $100 billion in management. 6.5% AA minus average credit rating. Right. So you look at here, you select the yield and the risk that you are able to accept. But there's one more thing I also want to look at. It's called the bond duration. Duration in simple term is a sensitivity of the bond price against interest rate. If the bond fund has long duration and if interest rate drop, you could see higher potential gain. Okay, when interest drop, bond price rebound. Okay, you look at long duration kind of bond or bond funds, you get higher potential recovery, higher potential gain. Okay, of course, longer duration also comes with higher volatility. All right, so if interest really drop, you will see higher potential gain. Of course, if interest never drop, all right, then of course you see higher potential loss. Right, yeah, or potential no movement. Okay, yeah, so this will tell you what should you hold. All right. For example, you want to look at bond with lower fluctuation, then you can look at this short duration bond fund. Okay, because this is only 1.7 years to maturity. Okay, on average, 1.7 years to maturity for the underlying bond fund, underlying bond at home. Okay, so it technically has lower fluctuation. But of course, with lower fluctuation, if interest rate drop to a very low level, you won't see a lot of capital gain. All right. Yeah. So this will give you some idea on how you should select your bond fund.